So Donald Trump is going to be the 47th president of the United States, and in today's video, I'm going to do my best to give you an unbiased view of what this could mean for markets. I'm going to be talking about the stock market. I'm going to be taking a look at some of the commodities like gold and silver, which have sold very hard off of this, the bond market, where bond prices have fallen and yields have skyrocketed, and of course the dollar index, which is up a whopping 1.6% today. I'm going to talk about what all this could mean for markets starting now. As we get started today, I wanted to mention our video sponsor. Our video sponsor today is Vantage. Vantage Markets allows traders outside of the US to trade all sorts of different markets under a singular brokerage and allows you to trade in your favorite trading platforms like tradingview.com directly or access to MetaTrader 4 and so much more. Under one singular brokerage with Vantage, you can trade a million different types of charts. You can trade crypto, you can trade stock CFDs, XAU USD, you can trade XAG USD, you can trade NAS 100, you can trade pretty much everything in one brokerage, which is a huge perk. Not only that, down below in the description, if you use the sign up link there is a generous welcome bonus available to new clients who start accounts with them. Check out Vantage and see if it's the right brokerage for you. It is one of my favorites for non-US traders to check out. Do your due diligence, see if it's right for you. Now back to the video. Now I just want to say a personal note about this time in the financial markets. I'm ready for them to be over. I don't love covering this topic. It is a topic that people get very upset by, and understandably so, as change inevitably can be a very difficult thing one way or the other. So with my goal in this video, I'm going to try and just keep it market centric, focused as best I can, and give you my honest take about what I think that this could mean for financial markets. So first off, there's a couple things that we can see on a high level note. The NASDAQ and the S&P 500, the Dow Jones, they're up 2% plus here today. The Russell's up 4.2%. Bitcoin is up 7% here. Ethereum is 9.5%. Clearly, the market is cheering the idea of a Trump victory. However, let me pause right there and just say that I'm talking about, of course, risk on assets that are responding very positively to a potential presidential election. And there's no surprise here if you think about the two main things that the stock market is paying attention to. That is, of course, taxes, which are expected to stay low or even get lower under Donald Trump. And the other thing is regulation, right? So traditionally, Republicans are more in favor of reduced regulations, which can allow certain businesses and sectors to really flourish. If there is less regulation, less restriction, less oversight from the government, these companies can make more money. Now, I'm not necessarily saying that I think that this is what is absolutely best for the economy, but this is what the stock market seems to be rallying off of. However, at the same time, there is something to the contrary that is a little bit concerning that I think is very fair to also point out about a Trump victory. Now, not only is it a Trump victory, but it is also just a straight up red wave. The Senate was taken by the Republicans in terms of a majority. The president, of course, was red. We have a very large Republican victory. And with that, the idea that some of Trump's tariffs that he's proposed are more likely to actually get passed into law. Now, there's not a certainty here, and of course, there is a democratic process to all of this. But that concern is showing up in the bond market. Take a look at the 10-year government bond yield, which is up substantially, up to 4.45%, a big spike today. And what this is telling you is the bond market fears the Trump reflation idea, which is the idea that if Trump gets into office and passes all these laws, inflation could come back on these tariffs. Now, remember, when you do tariffs, you're basically taxing imports from other countries, which when you add a tax to things, prices theoretically could go up. And economists have largely thought on both sides of the aisle that this could be inflationary. That being said, economists are not always right. In 2023, economists forecasted a recession with a 99+% certainty. We didn't get one, right? So economists are not always right. However, this is a very valid and fair concern about inflation because, again, people have some PTSD about inflation in the last few years, where inflation went absolutely crazy in 2022, and we saw rate hikes, and it really got people nervous. So I do think that it is valid that we are seeing some concerns on the inflationary front at the same time. Now, what does that mean for things like gold and silver? Well, it's a double negative, and that's why I think gold is down 2.7. In fact, yesterday I pointed out several times over the course of the last 2 elections, when we had Biden win in 2020, and when we had Trump win in 2016. Both of those scenarios, we saw an interesting story play out. In 2020, before the election, gold jumped up in price. Then after it, it dropped hard. In 2016, leading up to the election, gold prices rallied, then they dropped hard for the next actually several months. And in recent days, I warned you about the put-call ratio on my channel. Go back and watch these videos, go watch what I said about gold and the put-call ratio. We have been, and I'm patting myself on the back here, dead on with what the kind of playbook here is. People get scared, they buy insurance ahead of the election, and if there is a decisive resolution, it all unwinds, meaning gold prices come back down, stocks go higher as confidence is restored a little bit, and again, the put-call ratio drops. And I just want to illustrate something else. I think that if you had seen Kamala Harris win, there would probably be a similar reaction. Probably see stocks higher, probably see gold down. The market just wants to see a decisive, leadership change, not a question mark about leadership change. And so in some ways, whether it was a, outright win for Kamala Harris or an outright win for Donald Trump, I do think that the market is celebrating at least knowing something rather than not knowing something, if that makes sense. So far, this is exactly where I am currently positioned. Based on the analysis that I just shared with you, I went long the NASDAQ inside of our VIP room a few days ago. I bought NASDAQ down here around 20,000, and I also bought Bitcoin, which both of these trades are doing quite well so far. In fact, I'll show you the P&L of the current positions that I have. Sorry, I had to move my camera. You can see them now. So I'm long NVIDIA, Airbnb, QQQ, XLRE, which is a real estate ETF, which is not doing so well today due to rising yields, SMH, and IBIT, which is a Bitcoin ETF. And if you have not already joined us inside of the VIP room, because I just mentioned it, every trade I take gets shared in full detail to our members inside of the Discord. With this upcoming, administration from Donald Trump, it brings back flashbacks to when I was trading this the last time around, back in 2016 to 2020. Very volatile times, big moves, lots of opportunities out there. If you are not already in the VIP group, it is a one-time fee to join. We're doing a Black Friday discount, which gets you 40% off right now. You can use the link and promo code down below in the description. And if you have any questions, use the first link in the description to chat directly with a member of our support team to answer any questions, pay with crypto, if you want to see some examples, things like that. We're happy to help, give you some more information to see if it's the right service for you. Again, I trade real personal live capital, and I share every entry, exit that I take, and full breakdowns on every trade, and more importantly, the analysis behind why I'm taking them. So the question now, is gold a buy after this recent dip? And in my personal opinion, the answer is not yet. Now, I could be wrong about this and gold could go back up, but for me currently, I don't see it on my top setups radar. And if I don't see gold as a bullish or bearish reading, there's no trade for me to take. Price action has been in a strong upward trend this year, and I've been very bullish on gold for a lot of this year. But with the recent kind of pickup in jobs data, except for the last one, before that one, services PMI data, a lot of the economic data out there is sort of showing some strength for the US economy. We can take a look at this in closer detail by going to the gold and silver page under data scanners within the Edge Finder. And while we look at this, Chandler, if you could help us zoom in just a little on this table, thank you very much. Check this out. We can go metric by metric and talk about why I'm not super bullish on gold right now. GDP growth did miss expectations, which, remember, cooler or weaker economic data is perceived as more bullish in the Edge Finder for gold, simply because, again, people flock to gold in times of uncertainty, and that also potentially produces a weaker dollar. But right now, we just see a mixed bag here of numbers. Let's go through them very quickly. 2.8% compared to 3%, that's positive for gold. Manufacturing PMI did come in weaker than expected, which is also positive for gold, but services came in very strong. That's bearish for gold. Retail sales came in strong. Bearish for gold. CPI, hotter than expected, not great for gold because that means the Fed may not cut rates as much, especially with the recent, Trump victory. Inflation concerns are now even higher, so we'll see what happens there. Core CPI came in line, so that's a mixed bag. NFP did come in very cool, which was positive for gold prices. However, unemployment rate did not go anywhere, and so that's a neutral. So you can see my point here. We're sort of on the cusp of a neutral range because U.S. economic data is not falling through the floor. Earlier this year, there were more signs of a crack cracking in the economy, which made me very bullish on gold. But since then, we've seen some numbers round out, and I'm a little bit cautious with gold, especially with increased inflationary pressures that could come into the picture. I don't know. I'm just saying they could. It makes me a little cautious on trying to get overly bullish on gold near all-time highs. And I do want to clarify, all-time highs on a price action basis is not a reason for me to sell something. What is more important is the actual economic data. By the way, the tool that I'm using is called the Edge Finder. It is also available 40% off for Black Friday. The link and promo code are also in the description. Next up, I want to talk about the dollar index on a daily chart. You can see a big pop through these levels of resistance. And again, dollar strength is coming in off of the idea that, again, basically international trade disruptions that could be more favorable to the dollar and hurtful to other countries. I spoke actually today on the podcast that I do, the Market Insights Market Pulse podcast with Johnny Hart. Him and I were talking about this a little bit, and he was pointing out that, the UK, for example, where he's from, exports a lot to the United States. Increased tariffs could hurt the GDP growth of the UK. Again, international trade disruptions can be perceived as a negative thing for some other countries, but are showing some strength in the dollar. We can see that in, for example, the loss of value in the pound here this morning. Same thing with the euro. These places that are large exporters to the US may see hits to their economy if tariffs are drastically increased. So that's another reason why these currency pairs are really dropping hard here today. And the same reason why the dollar yen is breaking out. Actually, I really like this chart for bullish setups. If you can get some breaks and retests, I may very well look for some opportunities to continue to trade the dollar yen in the direction of the bulls. Again, top setups, I believe, is giving us a bullish rating. There it is on dollar yen. It's a current list of all the latest readings on the Edge Finder. There we go. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.